Hi, I come from a part of the world where if you talk about life insurance, the next question will be, are you bringing me back from the dead? In other words, are you replacing what I've lost? Yeah, I'm not there anymore. So, gone are the days. In today's episode, we have Eliel Bueno. He's an insurance professional, and he's going to break down the complexities that surround life insurance. And if you're new here on this channel, we have conversations that matter. If that's what you're interested in, subscribe. And if the video turns out to be worth sharing, please do. I am Brian, and this is Bryn Dialogues. Eli, you're welcome to Bryn Dialogues. We are thrilled to have you as we cover the critical and yet overlooked topic of life insurance. How are you?
I am well. Well, how about yourself?
I'm okay. Before we start, briefly tell the audience who you are.
Well, my name is Eli. The full name is Eliel, but they call me Eli for short. I specialize in helping individuals, businesses, and families with various insurance products, mostly life insurance, disability insurance, health insurance, and also some retirement income as well too. So that's what I specialize in.
And you cover Massachusetts?
Yes. Massachusetts, Rhode Island. I'm also licensed in other states, 13 states in total. Connecticut, New Hampshire, New York, New Jersey, Florida, South Carolina, Virginia, Texas, Pennsylvania, Michigan. So in about 13 states.
About 13 states. What do you have to do to cover all that?
It's just applying with the state that you want to work in. So you submit an application to that state that you want to sell life insurance or any insurance product. And then once it gets approved, you're licensed to sell in that state.
You speak Spanish?
Yes.
And
I thanks to my mom, because I arrived here when I was very young. About 3 years old is when we got here back in 1980. So my mom's persistence with us speaking Spanish at home really paid off.
So let's dive straight into insurance.
Okay.
What is term life insurance?
Term life is temporary insurance. It's designed to last, whether it be 10 years, 15 years, 20 years, or 30 years. There are some term policies that also offer 25 years. And the reason why it's called temporary is because it expires after that time period. So once, for example, if you have a 15-year term insurance, after the 15th year, that insurance expires.
What's the opposite?
There's whole life.
There's whole life?
There's whole life insurance. That encompasses your whole life. It doesn't expire. And the difference between the two is that with whole life, there's other features that term doesn't have, like, for example, a cash value component. So with a whole life policy, there is a cash value that builds up within the policy. And if someone chooses to, they can borrow against it for emergency expenses or paying off some credit cards or even going on vacation as well.
So whole life is like both insurance and savings?
Yes, that is correct.
If you were to pick which one you would go with, term or whole, what would you advise?
It all depends on your goals and your needs. Like, for example, if you just bought a home and you have a mortgage, some term policies are designed to pay off that mortgage in the event of someone's death that bought the home. So you buy a home, you want to protect your family in case something happens to you, so that way that is taken care of and any other expenses. And term is also less expensive. And whole life, the premiums, you'll see that it's a little bit more expensive because of the cash value component and also the fact that it doesn't expire. So I can't tell someone take this or take that,
Right.
Because at the end of the day, people's goals, needs, and budget comes into play when recommending a policy.
How would someone arrive at a number they would want as a a death benefit?
Is there is a financial needs analysis that or a fact finder. So we calculate, credit card debt, vehicle loans, any medical bills, if there's a mortgage, it's all calculated. And then based on that, we can come up with a figure that would be enough that the person can carry as a coverage amount, just in case something were to happen to them.
Okay. You mentioned whole life.
Yes.
What is whole life?
Whole life, it encompasses your whole life. For example, whole life can last up until age 100, or it can go all the way up to age 120. The way the policy is designed, it can be either 100 or 120 years of age.
120 years. That's definitely not for the Americans.
There's only been so very little people that have passed over 110. Very little.
Wow. Okay. And what happens when you turn one? If you 101.
Oh, with a whole life policy at 101, what happens is that if your cash value is equal to the death benefit, the policy stops, and then they'll pay out to the policy owner the actual cash value if it equals the death benefit. So, for example, let's say that you have 100,000 of whole life, and you reach the 100 years of age, and they'll send you the amount of equal to the death benefit, which is 100,000, and then the policy ends. That's what happens. It's called when the policy matures. So once it's matured, that's what happens. If the cash value equals the death benefit, what happens is that the policy it discontinues, and then whatever's there in cash value, they'll mail a check out to the policy owner, because the policy satisfied its goal. That's what happens when a whole life policy matures.
And then what happens to the death benefit?
Oh no, that's it. It goes away, because the cash value equals the death benefit. So once it reaches that amount of that equality, the policy discontinues, and then the insurance company will send to the policy owner the cash value, which is 100,000. And this is just an example it could be 50,000, it could be whichever the cash value, whichever the death benefit is, that once it equals to the cash value equals the death benefit, they'll send that over if you reach your 100 years of age.
Okay. So if
I'm sorry. And remember, only if the policy is designed to last up until age 100. There are policies that can go up to age 120. So depending on how the policy is structured, those are one of the things that can happen once the policy matures.
I'm gonna guess that the longer the policy, the more expensive it is.
Not the longer, but our age is a factor as well too. So the older we are, premiums tend to be a little bit higher in cost, because health and age is a factor in determining the premium amount. So the healthier we are, the younger we are, premiums are less expensive when we're healthier and younger.
At what age can you apply for insurance? Life
A
insurance.
parent can actually get a policy for their child that's 1 year old, but normally an adult 18 years of age and older can apply for either a term policy or a whole life policy. But the insurance carrier themselves, they determine the ages based on which insurance product you're interested in. So, for example, there are some policies that if you're 16, you can't apply on your own. It's got to be a parent. But once you reach 18 years of age, you're considered an adult. You can go ahead and apply for insurance if it's of your choosing.
What are the requirements
For applying?
Yeah, for applying.
License or state ID. If you have stable employment, they need to make sure that you can pay for the policy premiums or any other income that's coming in. They also check your driving record.
They check driving record?
Yeah, they check your driving record. They check your health record. They just want to make sure that there are no issues there, because there are some policies that, unfortunately, if you have like a DUI or felony, they may not approve the policy because it's a risk factor for the carrier. So they're the ones that determine those guidelines. The agent just, you know, asks the questions, and then they can, if everything checks out, then they can continue with the application if there's no issues that arise during that process.
DUI?
A DUI could be a factor in declining a life insurance application. For example, if I'm right now, we're sitting down together and I'm asking you questions and you say, yes, I'm interested. I provided you a quote. You're like, I want this policy. And I say, hey, any issues with your health? You're like, oh, my health is fine. I have no issues. Any issues with your driving record? And you tell me I have a DUI. I may not be able to submit the policy because of that, because I already know that the carrier is going to decline it. That's one of their regulations and requirements. It's a risk factor because if someone shows irresponsibility, recklessness, they pose a risk to their lives and the lives of other people. So that's why the insurance carrier, to minimize the risk, they would prefer to not approve the policy if that were to pop up in their record.
Credit score?
Credit score, they could use the credit score system just to. There are some carriers that they do check your credit score. That can affect the premium as well too. Not too much, but they do check everything to make sure that everything checks out.
So basically, you have to be responsible to get an insurance.
Absolutely.
If you're just starting up, it can be hard for you.
I mean, once they check everything and they realize that everything is good, they'll issue the policy if there's no other issues going on. The carriers are very lenient. If, for example, someone's 18, they just started working, they're not going to decline the policy. But if there are health issues, there's DUIs, there's felonies at whatever age that we have, that is when things can get a little complicated in getting the policy approved.
When you say health issues, what do you mean?
Well, for example, there are some policies that cancer could be a factor, especially if it's stage 4.
Okay.
A lot of stage 4 cancer, people that apply that have had that or during that, they may not get approved. But if it's something simple that, hey, they just found something and they took care of it, that may not be a factor. But again, it all depends on the requirements of the carrier. I mean, I can sit here and talk about all the different diseases, but at the end of the day, the insurance underwriter determines, based on what he sees, if a policy should be approved or declined. And again, it all falls back down to the risk factor. But I do have to say that the younger we are and the healthier we are, the premiums tend to be very favorable. There's different types of categories. Like, for example, there's standard and preferred. You can apply standard, and let's say that, I'm just going to use a hypothetical number. Let's say that the rating for standard is $50 a month, right? And then the underwriter checks everything, and you're like, perfect, there's no issues. They can switch it to preferred and reduce the premium a little bit to give you a break because you've applied better than what you applied for. So they'll give you a discount on the rate or on the premium if you get preferred versus standard.
If you have been to jail, is that an issue?
There's got to be a few years that have gone by before they can issue or approve a policy. That is a factor as well too. Again, the carrier themselves they have all the requirements, the regulations, and it's up to the agent to determine what happened. Are you on parole or are you not on parole anymore? So there are questions that need to be asked if that is the factor, and then the insurance carrier determines if they're going to approve or decline a policy. So it all falls on them to minimize the risk. And that's why if that is your scenario, then the agent may ask, what happened and what's your status now prior to submitting the application.
Do you need to have a permanent address?
Yes, actually, yes and no. For example, some people have multiple addresses.
Okay.
So it's not like, I mean, you can have a vacation home in Maine,
Mm-hmm.
and you live here, and you can use your main address if you wanted to. So there is, as long as you have a physical address, some insurance carriers don't like PO boxes, but they can make an exception if that's where you want your policy to go to, because they want to make sure that you do have a physical address, just to verify you. Just for verification purposes, but if you have a PO box and you want stuff to go there, that's fine. But they just want to make sure that you do have a physical address.
Is your immigration status a factor?
There are some carriers that it depends on the status that you have. There are some that will take work authorizations. Others will take people with certain visas, that are issued from the government. So depending on the status that you have, there are some carriers that will make a consideration for you. They can also issue policies to foreign nationals.
Mm-hmm.
But again, that's something that the carrier determines. So the agent asking the questions will find out based on the person's status if they can apply for a life insurance policy.
And if do you have to live in the U.S.?
Some foreign nationals travel back and forth. So let's say that they have a home, uh, they live abroad, and they're here for business for purposes, but they have a presence here. They can apply for a life insurance policy.
And you can pay like your premiums, you can pay the whole year at once?
Yes, carriers offer different payment options. You can pay monthly, you can pay yearly, you can pay every 3 months. So there are options to make the premium payments.
Do you cover the army?
It depends. For example, one of the underwriting questions are if the person will be engaging in, like war and things like that. So again, depending on your answer, it depends on the carrier if they're going to approve the policy or not. Because again, there's a high risk factor when it comes to people that are enlisted. They do have, within that structure, they do have certain stuff in place, things in place. But when it comes to like your individual policy, it all depends on the carrier's requirements and regulations.
For example, the Coast Guard.
Same thing. Same thing. Anyone that is participating in any of the armed forces, we don't we don't frown on someone applying, but at the end of the day, it all depends on the carrier's decision if they want to approve that policy or not. People that do extreme sports, for example, those are one of the questions. If you're going to be engaging in parachuting or extreme sports, it depends on the carrier if they're going to approve or decline a policy, because again, there's a risk factor.
Skiing.
Skiing is also, an extreme sport per se. Motorcycle riding, or not riding, racing.
Motor race.
Motor
Okay.
racing, because you get approved for a policy, and let's say that they give you a significant amount of coverage, and then the following day or 6 months from now, you were to pass away in performing in that extreme sport, that's a risk. So again, it all depends on the carrier.
So let's say I get insurance coverage, right? And after 2 years down the road, I enlist. Is that an issue?
It all depends. It all depends. This is something that you have to let the carrier know, because if you withhold that information and they realize that the cause of death was because of war, they can not pay out the death benefit. So that's why it's always good to inform and be straightforward and explain things to the agent or the carrier, so that way if something were to happen, they don't deny the claim.
It may not be war, but if you're within here, somebody comes, maybe there is a scuffle, there's a shootout, you're among the people who are injured, but then they find out later that he was also enlisted. But the cause of death wasn't because he was at war.
The same thing applies, because of the fact that just the fact that you enlist could pose a risk, because we have to look at it from the perspective of the insurance carrier. You said in the application that you're not going to be enlisting. and then let's say 2 years later you enlist, that's like not being straightforward. So that's why it's always good to be very careful
I don't know.
how you, or maybe I'm not understanding the
No,
question.
I don't know. I don't know if I said I'm not gonna be enlisting. I'm just like, did if you ask, are you enlisted? I'm like, no. The thought hasn't come, right? But 2 years down the road,
You do
I see an
enlist.
opportunity. I'm like,
Again, it all falls down to the decision of the insurance carrier.
yes, Gary,
And it's always good to, because in the application, it's going to ask you if you are enlisted or will
enlist.
enlist. So that's those little words that we have to, the little print, keep in mind, because if you say no and then you do enlist, you may not be in fighting, but the fact that you said no and then now you are, and something were to happen to you, even if it's not war, they could deny the claim because you said no. So that's why it's always good to, whatever we decide in the future, or if you're thinking about it, I would always let the agent know, and see what the insurance carrier says. What would happen if you did enlist, but you're not, out there in the field? You're just like working from home or something like that. It's always good to let the agent know, so that way, if that were the case, and if it were to happen, they don't not pay out any proceeds if something were to happen to you.
What happens if maybe life happens and you're unable to pay the premiums? When, like, say you're out of a job.
There are some policies that
Mm-hmm.
they have a feature or a rider on it, waiver of premium, that if, for example, you are not working anymore for, like you said, something happens, they can suspend their premium payments for a period of time until you can get back to work again. So there are options. If you don't choose that feature and you're not working, you can't pay the premiums, and they haven't received anything, they'll just cancel the policy. After a couple of months or so, they'll cancel the policy. Yeah, they'll mail you some letters. They'll email you and say, hey, this premium is due. Hey, this premium is due. And then after a certain specific amount of time, they'll cancel the policy if you haven't paid the premiums.
And will you get a refund?
Unfortunately, not. The only time you could get a refund is if you have a whole life policy and you have paid on it for a number of years. There's something called the surrender the surrender value of the policy. It's what the value of the policy, what it's worth. So if you decided not to have that policy anymore, you can surrender it, and then whatever is there, they can send you that amount that's in that cash value. But if you just decided to just not pay the premiums anymore, after a specific amount of time, they'll just cancel the policy.
But they will have to communicate to you first.
Absolutely.
It just doesn't come out of the blue.
That's correct. Yeah. Either via email, or letters, informing you that there's premiums due. And again, there's an option that if you click waiver of premium, whether it be for disability or if you're not working, they can suspend the premium payments for a specific amount of time until you get back on your feet again. So that's an option that the application has if someone were to select it.
Is there an option of lowering the premium?
Unless you reduce the face amount. Like, for example, some carriers allow policy owners to reduce the death benefit. So by reducing the death benefit, it'll just adjust the payment. So once that death benefit is lowered, it'll reflect a new premium payment that can fit within your budget and your lifestyle as well too.
How do you make a claim?
It's just simple. Just letting the insurance carrier know. Some people have a really good relationship with their agent, so they just inform the agent, and then the agent in turn lets the carrier know. But if someone were to pass away, once that carrier receives the death certificate, they'll process it, they verify everything, and then they'll just cut out a check to the beneficiary. So that's how a claim is submitted. There's a form that you fill out.
There's a form.
Hey, this happened, and then they're going to ask you for the death certificate. And
who fills out the form?
the beneficiary.
Okay.
The person's not alive anymore to fill it out.
Yeah.
So then the beneficiary fills it out
Mm-hmm.
and then submits that with the death certificate. So once that carrier receives it, they'll process everything and then they'll mail out the beneficiary the proceeds of the death benefit.
Have you been to scenarios where you like the carrier would communicate that, hey, payments have not been made, what's wrong with what's happening to this person, and then you reach out like, oh yeah, he died.
I've never been in that scenario. I've never been in that scenario.
No,
No.
because sometimes I'm thinking there are people who pass away and the beneficiaries don't know that these people had an insurance.
That's why I always tell, everyone that applies with me, I would say, hey, make sure that your beneficiary knows that you have this policy. So that way, if something were to happen, they can either call the carrier or call myself if I'm alive. But most likely they can call the carrier and submit the claim. Because if the beneficiary doesn't know, and premiums stop, it'll be unfortunate that the policy gets canceled, not knowing, and the beneficiary not knowing that he had that policy and could have used it when the person passed away.
Now that you've mentioned that, if a policy is cancelled by the carrier, right, and because of not paying the premiums, and after it's cancelled, find out the beneficiary reaches out and like, hey, um, this person died and was a policy owner. What happens when the person died before the policy was cancelled, but the beneficiary reached out after
The person passed away.
after the policy was cancelled?
Okay. So I want to get this straight. Somebody passes away,
Mm-hmm.
right? And then the policy canceled after that.
Because the policy will cancel
Right.
if there are no premiums being paid.
Right. That typically won't happen because unless what you said before, the beneficiary has no clue.
Yes.
But if the beneficiary knows the person passed away, and had this insurance, immediately contact the carrier immediately.
Yeah.
So that way they can receive the claim and the death certificate and process it and pay out right away.
Mm-hmm.
But if you wait too long, it'll be unfortunate, And I'm sure that the insurance carrier, again, if someone hasn't made a premium payment in about a month, they'll send letters out, and I'm sure the beneficiary will read it and say, "Oh,
Not really.
I gotta
Not
take
really.
care of this."
People are still grieving, and they're like, "Yeah, we know it's probably some advertisement, some commercial in the mail." They won't read. They'll just like collect everything and put them in the basket somewhere. Then 5 months down the road, when they're trying to clear out everything, that's when they'll go through the mail and be like, "Oh, did you believe this person had a life insurance?"
That's unfortunate. Yeah.
I'm like, yeah, I think we
Have you
should.
seen something like that before?
Personally, no.
Oh, okay. Okay.
But I'm thinking, because given where I come from, people don't talk much about that. And I'm thinking because there may be some foreplay in that person's cause of death if they know that there is a death benefit. So to avoid anyone getting creative, okay, they just keep quiet about the whole thing.
I see.
How long does it take?
It could take from a couple of weeks to a month. It all depends. It could be a lot quicker, but again, everything lies on the insurance carrier receiving the claim and the death certificate. Once they have that, they can move a little quicker. But if it's delayed, sending that over to them, it'll delay the payout. So the faster they receive the claim and the death certificate, they'll process it and issue it a lot more faster.
If if you feel, if I feel they're delaying, can I ask for some advancement so that I can process? Um,
Unfortunately, there is no advancement after the fact.
mm,
However, there is a policy feature called terminal illness or acceleration of death benefit due to a terminal illness or a critical illness. For example, if someone were to pass away and they know it, that they have like 6 months to live or 3 months to live, they can request from the insurance carrier a significant amount of money up front to take care of those expenses prior to the rest of the money being paid out. So, for example, let's say that you have a typical guy that is going to pass away in 3 months, right? And he has $100,000 policy, a death benefit. So he can say, you know what, I need 25,000. I need 25,000 to pay off certain bills or credit card debt, or I want to take care of my plot, my lot where I'm going to be buried. I want to pay the funeral home, and then once the person passes away, the remaining 75,000 goes to the beneficiary. So that way, they want to make sure that everything's taken care of and not waiting for anything. But if somebody were to pass away unexpectedly, and they submit the claim to the insurance carrier and the death certificate, there is no advancement. The only person who can request that advancement is the insured or the policy owner in this case.
does the cause of death matter?
It depends on, again, the cause of death depends on, for example, if you were to suicide, there's a 2-year waiting period per
Suicide.
se.
Okay.
So if somebody wants to, commit suicide, it's in the policy. They say you have to, it has to happen after 2 years. And I'm not saying this for people to, go do something like that, but it depends on what's in the policy, because there are certain exclusions, and then there are some things that are not excluded. So as long as the death of that person is due to a natural cause or an accident or they're traveling, it'll pay out. But whatever the exclusion is, it'll be outlined in the policy.
Natural cause, you mean like illness,
Yeah, illness, heart attack,
drowning?
drowning, even a crime. Those aren't natural causes of past, or just unexpectedly, that stuff. The proceeds pay out. But if, for example, if you say no to parachuting, that you're not going to parachute,
Mm.
and then you go parachuting, and then the death certificate says he died because of a parachute accident, it may not pay out. So it all depends on the cause of death. It's a factor, but it also what's in the policy as well too, because there are some things that are excluded and some things that are included. Everything's in the death certificate. The insurance carrier, that once they receive it and they realize what was the cause of death and they verify everything, then they'll pay out. But if there's something, that's why they review everything very carefully. Because if there's something that you said no to on the application and you were to pass away of that same thing, they may not pay out. So that's always good to make sure that we're truthful and honest in the application. So if something were to happen, at least, we have that peace of mind that the beneficiary will receive the reward, or not the reward, but, the death benefit, proceeds if the insured were to pass away.
You mentioned accidents.
Mm-hmm.
With
Accidents.
any kind of accident?
Yeah, any kind. You could be on a flight, a train, an automobile. You could be at work and you have an accident, and that may cause somebody to pass away, or even at home.
Personal jet?
Personal jet. It depends on what's on the application, because a personal jet, it's not like you're doing an extreme sport.
No.
But if you're on a jet and you're traveling, and God forbid something were to happen, the policy proceeds would pay out as long as there are no exclusions. If it's not excluded, you're fine. Everything's all in the policy details.
You mentioned that some carriers will allow you to bring down the face value. Can you increase it?
Most carriers allow increasing, but sometimes what they would want to see is like another policy written. Like, for example, you have one for $25,000, you're not very happy. Rather than increasing it, they'd rather just have you write another policy for the difference of what you're looking for. So again, it all depends on the requirements of the carrier. Some do allow it, and then there are others that will say, you know what, don't increase it, just write another policy. It all depends on the scenario.
Can you change the carrier?
Absolutely. Like if one carrier is not satisfying your needs, there's something called replacement that you can actually, which is, for example, if you have a cash value life insurance policy and you're paying you realize that the premiums are a little too high, and then there's another carrier that would offer you the same benefits but with a lesser premium, you can actually do what's called a 1035 exchange. You actually they'll send a check of the cash value from one policy to start the new one. And then so that's called the 1035 exchange. So then this policy would end, and then you'll start the new policy with the new premium that fits within your goals and your budget. So that is allowable.
Okay. So because you mentioned cash value, I would say that is like life insurance.
Yes. Yeah, it's another term for it. It's a
Oh,
whole life
all life.
policy, or cash value life insurance is, for example, whole life policy, universal life policy, index universal life policy. Those are called cash value life insurance because all these policies or these insurances products, they build cash value. So let's say that you have a universal life policy that's paying you a fixed percentage interest, and you're like, you know what, I want to be a little bit more competitive. I want to, have more options or increase the interest I'm earning. You can actually transfer, if you have built up enough cash value, you can actually transfer into a new policy that actually satisfies the needs and goals that you're looking for. And again, that's called a 1035 exchange.
1035 exchange.
That is correct.
I hope that sinks. What is disability?
It's if you can't work because of an accident or a sickness or even an illness, which, if you can't work because of these factors and you have bills to pay, the disability pays you a specific amount of money per month, so that way you can keep your current lifestyle. So let's say that a disability policy can be not only from work, it can also be you're at home switching a light bulb. And let's say that you slip, you fall, and you break your leg, or you break your arm. Now you can't go to work.
Right.
You submit a claim to the insurance carrier, and then they'll pay you a fixed amount of money per month, so that way you can continue paying your bills. Because bills, unfortunately, they no matter what happens to us, it still comes in. We still got to pay those bills per month: rent, mortgage, car insurance, cell phone. Those are the bills that are monthly. So this disability policy, if you cannot work for a specific amount of time, whether it be 3 months, 6 months, or 1 year, it'll pay you per month until you get back on your feet again.
Does the policy have to specify that we shall only pay you for this amount of time?
Yeah, because you choose. You choose, because there's a 6 months, there's 1 year, there's 3 months, and then there are others that they don't specify the time. But as long as you're collecting, once you go back to work again, you got to let the carrier know, and then once you go back to work, you let them know, and then that policy stops paying you per month because you're back on your feet again and you're at work.
And then I continue with the premiums.
That is correct. That is correct. There are some policies that only you can do it for 5 years. Others are for 10 years. Some options with disability is that you get your premiums back if you never use it. Let's say that you have a disability policy and the contract is for 5 years. You never get sick. You never get injured. You never used it. You can opt, if you want to receive all your premiums back if you never used the policy. And disability encompasses, you can have a disability, and the cause of that could be heart attack, could be stroke, deafness, blindness, paralysis. Those are some of the stroke or mini stroke, those are different terms. If something like that were to happen to you and you can't work, that's called, disability. If you were to pass away from one of those things, then the life insurance will kick in. But only if you survive whatever that happens, then that's when the disability kicks in, because you submit a claim, and then they'll start paying you per month until you get back on your feet again.
If you don't survive that,
The life insurance kicks in.
the disability vanishes.
Yeah, because it's only if you're alive. And, like, let's say I apply for a disability policy and I want $5,000 a month if I get sick. I get into an accident and it pays me $5,000 a month. I never use it, and I just die of something, whatever. Then the life insurance kicks in, not the disability, because it's only when you're alive and something were to happen to you that you have to use the disability policy.
I know most of the employers have that.
Yes, short term or long term, they do offer that. Yeah.
There is short term and long term.
Yeah. Yeah, they're both the same. It's just that, for example, they offer either or both. They offer that. So what happens is that, let's say that you get into an accident and you can't go to work, and you elect to do short-term disability, and it lasts you 3 months or 6 months. Then that's short-term, and then there's others that may last a little bit longer, and you're healing. And you have to go through therapy. That could be a longer process. So most employers offer short-term and long-term disability. But if you're self-employed, or if your employer does not offer any of these things, you can purchase an individual disability policy and have that just in case, you were to use it.
If you have to change jobs, can you transfer?
It depends. Some carriers allow transference, but most disability policies that are from work, it's a group thing. So sometimes it's not transferable. So with your new job, you have to apply for the new stuff, because it can't go with you. That's because if the employer is paying for it, you can't take it with you unless the carrier allows you to bring it to your new job. If not, then it just vanishes when you transfer to another job. So that's why some people elect to have an individual policy, because it's portable. You can take it wherever you want. It doesn't matter where you work. You can be here, move to another state. It's still with you, versus work disability.
How about critical illness?
Oh, critical illness is a very popular one. That covers your heart attack, your stroke, just similar to disability. Your heart attack, your stroke, paralysis, deafness, blindness. So the critical illness policy, what happens is that it pays you a lump sum if you had one of these things happen to you. Let's say that you have a critical illness and you have a heart attack, and you survive. You can elect from $10,000 to $100,000 of coverage. So if somebody suffers a heart attack and they survive, they submit the claim, and then that carrier will pay out a lump sum, let's say $50,000, and they'll pay you $50,000 to cover any medical related expenses.
Do they have to survive?
Yes, they do. So for it to pay out, they have to survive, because that's the whole purpose of that critical illness. Because you're critically ill. So you survive, you're still alive, but now you have all these expenses, and you submit a claim, and then they just pay the lump sum. And some of these critical illness policies also have a return of premium option. So let's say that you never use it. At the end of that term period, you can get all your premiums back. And remember, Stephen, once the policy pays out, the policy ends.
That's for the critical illness.
For critical illness, yeah.
For the disability, once it pays out, the policy continues.
Absolutely. But with critical illness, is a one-time lump sum payment. So once you get paid whatever you're going to get paid for, the policy ceases, because it satisfied its requirements, or its purpose.
But both, if time comes when you haven't used or haven't made any claim, you can get cash back.
That is correct. Yeah, that is correct. Yeah, it's an option.
It's an
But if
option.
you don't choose it, you don't get anything back. But if you do choose, let's say that you have a critical illness for let's say 10 years, and you choose return of premium option, you never use it. At the end of the 10 years, once the 11th year kicks in, you get all those premiums back.
What is the difference? Why would a person choose a no return of premiums or choose a return of premiums?
The actual premiums are a lot higher with return of premium.
Okay.
Yeah, that's the only difference. Without return of premium is, I'm going to give you an example. Let's say that the regular rate is $50 a month, and return of premium, let's say it's $80 a month. It's just an example. So at the end of that period, if you haven't used it, you'll get all those premiums back that you've paid, versus not getting anything back. So it's a protection.
Okay.
Because some people they realize that they have, unfortunately, this is a very sensitive topic. Some people may have within their family history stroke, heart attack, diabetes. That can be in the family history. So maybe somebody might, have that condition because it runs in the family sometimes, So if somebody knows that there's a history of any of these conditions in the family, I would get a policy just in case, because something can happen, and if something were to happen, at least you have that protection that can pay you a significant amount of money to offset medical expenses or to take care of your regular bills, because the lump sum that gets paid out, it could be used however the person wants.
Okay.
It doesn't go to the doctor. It doesn't go to this person. It goes right to the insured. So you can use it to pay a mortgage payment. You can use it to pay your credit card bills. You can use it to pay whatever you want that you see fit, even medical bills, because that goes right to that person that's insured.
And also, with the critical illness, you have to survive.
That is correct.
You have to be alive
That is
to make a claim.
That's correct. Yeah.
If you're in a coma, what happens?
I would say that it all depends on the requirements of the carrier. What would they decide in that situation? Because the person is alive, but they're just not responsive. And that unresponsiveness could last from a few weeks to a year,
Months.
or more months, or a year.
Yeah.
So it all depends on what the carrier will decide, if that were the scenario.
There are illnesses that will render the person incompetent of making decisions.
That is correct.
In that case, the person can't submit a claim.
In a case like that, before something like that were to happen, I always recommend to get like a power of attorney. And that's something where you give the family member certain authorization to act in your behalf if the person was rendered how you described. But the family members are the ones that decide. But to be on the safe side, maybe like a power of attorney would suffice in the event that someone is rendered incompetent to make a decision. So that way that family member can actually act on that person's behalf and submit the claim if that were the case. Insurance is a very complex topic because there's a lot of moving parts to it, a lot of requirements, a lot of regulations. So that's why when somebody receives a policy, always make sure that we read it thoroughly, that we understand it. It's a fascinating field, but at the end of the day, it has many moving parts. So it's always good to be well aware of the policy details. How is it going to help you? Because at the end of the day, if somebody were to submit a claim, we want to make sure that there are no issues and everything is a smooth transaction. So it's very important that we're well aware of the policy when we receive it, whether it be life insurance, critical illness, disability, health insurance. It's always good to be well informed of the policy.
Thank you.
You're welcome.
Before we end, if somebody wants to reach out, how would they reach out?
They can reach out. I'm going to provide two numbers. The first one is my toll-free 855 number. So that's 855-914-3210. And my personal cell phone is 401-257-8516. and they can reach me there
Anytime.
anytime. After hours, well, you know,
That's debatable. Well, they can text.
Text, or I've had customers that I don't leave till like 10:30. So I'm very flexible. People have odd schedules right now to
Right.
make ends meet. Some people have a second shift job and a third shift job. Others have a split shift. So if somebody needed me at a certain time, let me know and I can accommodate. I can accommodate
Yeah.
to help as many people I can to not only understand certain insurance products, but answer the questions that they may have and find them the policy that fits within their lifestyle, their goals, and also their budget as well.
Well, Eli, I want to appreciate the time you have given us to come and share. Uh, I have learned a lot, and I'm hoping the audience picks out a thing or two. I'm thinking we have broken down those means, the complexities of insurance.
You're welcome. Thank you for having me. And to all my audience, I wish them a happy, wonderful afternoon.
And there you have it. Eli's details are going to be included in the description. Please check them out. If you feel there's something we haven't covered, let me know in the comments. And if you want to add on, also let us know in the comments. If this video taught you something, give it a thumbs up and share it. I am Brian. If you still want to hang around, I've added a video for you here. See you in the next video and stay safe out there.